Hey everybody, this is Chris Pulver here with the Rob Booker Live Seminar follow-up. This is my colors presentation, and just wanted to give you a little bit more detail and walkthrough on the actual strategy. So this is the pound Australian dollar. Like I said in the seminar, this is my favorite currency pair to trade with this setup. So I have the indicators as I indicated in the PowerPoint. I have the 3, 5, 8, and 13. So I did add those additional levels. You can see those again when I resent the PowerPoint. So I have a T3 average, length of 3, which is red, length of 5, which is black, length of 8, which is blue, length of 13, which is orange, and then I have a dotted line, which is 21, which is kind of just like the end-all be-all of reference points. But for the most part, I'm focusing on the 3, the 5, and the 8. So much like I said during the presentation, price above or below the 8 is a good indication, especially with the colors. And then the trigger, or how it would actually be taking the trade, is if the 3 and the 5 are crossing over. So let's go ahead and dive into this chart. This is actually today, and I was trading this morning's session, and I'll show you the difference between the two. This is the 10-minute chart on the pound Australian dollar. So what we're going to be looking for is a crossover. Now, I don't start trading until roughly 2 in the morning. So this is right around 2 a.m. This is actually right here is my 2 a.m. candle. So we're at 95.74. Now, we have actually looked at, if I zoom in on price, again, this is the 2 a.m. candle. You notice that the crossover of the red and the black, which is right here, is actually still showing red candles. So I'm not interested in selling this currency pair, even though the red candles, I have a crossover that looks green, so I need to be buying this currency pair. And right now I don't have any confirmation on the 10-minute chart to buy. So I'm staying out of the trade until I have this green candle. Now this green candle closes at 95.92. If I took a position there, I'm looking to try to make this trade, getting 20 to 40 pips of profit to protect my position. So this is my management rules. You know, at plus 20 pips, move, stop to break even. At plus 40 pips, move, stop to plus 20 or 30. I would recommend actually moving it to 30 if you can, and trail for profits. Okay, this is going to be the most consistent way to manage these short-term trades. Try to be aggressive, kind of like Matt Lococo, and don't let the market move against you. Also, you can close out the trade if the color changes in the opposite direction, and that rarely results in a full loss. So the biggest loss you should experience, so max loss is usually 30 pips. Now, the exception is news. All right, if there's some news spike or something like that that pushes through your stop, I mean, that depends on your broker, of course. But if you have a news announcement that really spikes aggressively within 1 minute, you might have to take a little bit bigger loss. But if you have a broker that fills your stops and limits with no problem, then 30 pips is typically the largest stop loss that you'll take, or the largest loss you'll have. And also, when it switches colors, you're rarely going to lose a full 30 pips. So let's go ahead and move forward on this setup. This is the 10-minute pound Australian dollar. So let me delete this for a second. So we're buying it right now. Okay, now you're going to see the difference between the 2-minute and the 10-minute. So if I were to buy right here, if I bought that candlestick, let's assess how much risk we're going to have on the table if we put our stop loss below the crossovers. So if we got in here, we're looking around, I need to see a little bit more price action. Okay, we'd be looking around, that's 14 pips. It's around 22 to 25 pips for a loss if the color changes or we're below this area. All right, so you can see here that on the 10-minute chart, we have a crossover, we finally get a green candle, and our buy position actually makes us buy towards the high. So what happens shortly after? Well, we have a red candle. We also have another crossover of the black and red lines. So we have a crossover right in here that happened shortly after these bearish candles. Now, this bearish candle, this big red candle right here that I have the circle on, does not mean reverse your position, okay? Because you don't actually get a crossover until here. So I know that when I show the presentation, I just illustrated originally the blue and the orange lines. Okay, now yes, price is below the blue line, all right, but I like to add that extra element of confirmation, which means I want my red and my black lines to cross over. So I would have taken a loss here, okay, and I'll show you the difference between the 2-minute chart. I didn't take a loss. I actually made 0 pips because I had a stop loss that was protecting my 20 pips, and I'll show you that in a second. But this turned red. We now have a crossover. Now this crossover should be bearish, which means this is the candlestick we're going to sell. So the close of this candlestick. Now of course, if you want to take a hunch and a guess and say, well, I've got a bearish crossover, there's all sorts of ways that you can trade it and you can mess it up. Or you can be profitable. I want to make it really simple, really straightforward. So look, you sell red. If the market crosses over with this red and black line and you get a red candle, you take your trade. And you can see how price continues to push in that direction. So from this candlestick closing at 95.53, the beautiful thing is price came all the way down to 94.52. That's over 100 pips of bearishness before you had a pullback. So even taking a loss here, which would have been about 20 to 30 pips, volatility struck, crossover happens, candles turn red. This is a 100 pip movement of profit. Even if you didn't make 100 pips, it's enough volatility to make up for your loss. All right. So that was the London session, and then actually in the New York session, you can see that price continues to press down a little bit lower. As far as managing the lines, okay, I was taking this trade. I was already done trading here. I was done trading here. I didn't lose on this position. I'll show you why in a second with a 2-minute chart, but I did not lose here. I did take the entry, actually a similar entry on the 2-minute chart, and I ended up making about 65 pips on this trade. This candlestick pushed back. I got stopped out of the trade around plus 65 and went back to sleep. And then I woke up this morning and had to teach a class, and on the 2-minute chart, we were actually buying it way down here at 94.45. And I'll show you again on the 2-minute chart so you can see the difference. But you notice what we have? We have all of our trend lines. And again, this is why I like the T3 average, because they tend to be very smooth. The blue line, price stays below, price stays below, price stays below. The orange line, price stays below, price stays below. We have another crossover right down here. Now this crossover that's bullish is not confirming the momentum with the candles. So there's no trade yet on this 10-minute chart until way up here. Now if you took this trade on the 10-minute chart, you can still see that currently, going into roughly 12 p.m. Eastern time during the New York session, this market has still made a way up and all green. And that entry, even though it's mediocre, had an opportunity for over 113 pips. Okay, so pretty simple stuff. Volatility on these currency pairs, 200 pips, 230 pips, 250 pips a day, looking to trade that volatility. Now, let's show you what the 2-minute chart looks like. So the 2-minute chart, let's go back here to that London session. Let's find 2 a.m. So here's 1:58, here's 2 a.m. Now, I don't have a crossover yet. And you can see that right now we're kind of in the sell zone according to our orange line. I don't get a crossover on the red and black line. Those are my primary trigger lines. I don't have a crossover until right here. So here's my crossover. I'm looking to buy my green candles. All right, now you can see that it went green and went red, but it was only upside down. There's 75, there's 73. I'm only upside down 4 or 5 pips. I let another 2 minutes pass. There's my bullish candle. I got my run. So I was in here with the spread and everything was right around 95.78. And we had a run up towards 9,600. So that's over 30 pips of profit that I didn't take. Now, the reason I didn't take it is because it wasn't 40 pips. Normally when I'm up 40 pips, I move it to 30 and I trail it. So I moved my stop loss to break even, and when this spike happened, I got stopped out at break even on the trade. So, okay, I still didn't have a crossover according to my red and black lines. So just because it turned bearish doesn't mean I'm trying to do anything with it. Okay, so it turned red. I stayed out at break even, or I got out at break even rather, and then I just waited. You know, I compressed my chart a little bit, noted this level of support, potentially this level of resistance. You can see all these really nasty wicks, but guess what happened? Now I have a crossover. Okay, now if this were to keep going up and staying bullish, I'd be looking to buy. And it may not be the best entry, but I'd be following the colors. This crossover of the red and black, as well as price getting below the blue line, means that I want to start looking to sell. So I was selling it right in this area. And there's my run on the 2-minute chart of over 100 pips. So this area all the way down is 114 pips. So even though the 10-minute chart and the 2-minute chart compare and they relatively add up to the same amount of pips, the entry and the confirmation sometimes is just so much better. And I can wait and watch red candles every 2 minutes. For some reason, I don't like watching 10-minute charts. You know, it's fine to walk away for 10 minutes and come back, but on a 2-minute chart, I can somehow just sit here and watch red candle after red candle after red candle. And of course, that's great when it finally pushes. This was actually a news announcement at just after 4:30, came in negative for the pound, and it pushed it all the way down. That was over 100 pips. Now, like I said, I was already out. This was actually a bearish move. I had my stop loss locked in, and I got knocked out right up here, just shy of the news. So, but still, that was about 60 pips of profit. And then coming into the U.S. session, was teaching a class. So what do we have? You see the crossover? Crossover down here. So look, keep in mind, I'm not chasing the market in this area. Could I have sold it again and kept selling red, selling red? Sure. Take it down for more pips, that's great. But after I make one nice trade, I'm normally done trading. The only reason I traded again this morning was because I had a class to teach at 7 o'clock. So this is right around 8:30 in the morning. You can see we have a crossover with the red and the black on the 2-minute candle. Here's my green candlesticks. Okay, now, crossover green, I was able to get in this price right there at 92.45. Their spread was about 2.5, 3 pips, so 92.45 is my fill. I was up 30 pips. I went to break even, and guess what? I got stopped out at break even. And I saw it go green, I saw it go green, I saw it go green. I had to re-enter this trade. So the problem is sometimes I wish I could just leave the trade alone, but I'm trying to follow a set of rules where I limit my losses or really manage my trade aggressively. And so I was up 30 pips, went to break even, got stopped out. Took another trade on a green candle. It wasn't a good entry. It was up here around 94.65, but green candles ensued. Look at how smooth the crossover is on that T3 average. This was another run. Okay, until we went sideways. Now that little run, let me find the ruler tool. That was about 88 pips. So I didn't make 88 pips. I didn't make 120 pips because that was the entire length of the move, if I'm not mistaken. This, green candle all the way up to the top was over 140 pips. I didn't make that many pips, but I got back in. I made another 50 pips. So I made 63 on the way down, roughly 61 or 63 on the way down, got stopped out, and then I made another 50-some pips in here, even though it went higher. So on 2 trades, pound Australian dollar, good volatility, couple crossovers, over 100 pips for the morning. Not too shabby. All right. Now, in hindsight, it looks like, well, man, you could have killed it. You could have just made all these pips and it stayed red the whole time, and all these pips and it stayed green. Yes, I realize that. It's always easier in hindsight. But the reality is this is a very nimble system for some crossovers. Now, what I showed you in the presentation compared to what I sent you in the PowerPoint, the only thing that I've added is the black and the red line. That is my trigger line that I'm looking for the crossover. So once price is above the blue line and I have my trigger lines crossing, that's when I'm looking to take action. All right, so price is below the blue line, crossover on the trigger lines, that's where I'm looking to take action. Nice trend. Nice trend. And day in and day out with a high volatility pair like this one, which is 200 pips a day or 250 pips a day, it's pretty nice to capture some of those moves, even if it's only 50 pips or 60 pips or 30 pips or break even, it's better than losing. So I decided to protect those positions. So if you have any questions for me, you can always reach out to me, pulverchris247@gmail.com. Again, it was great meeting everybody at the conference, and thank you for the contact information, and we'll be in touch.